and the KYC and the security and the insurance for each crypto and digital asset service provider needs to be putting down on point. That's one of the biggest factors for each regulatory regime to adopt a regulated digital asset business. That's how it works mainly in a common and a broad way.
Okay, so that's it for you, Gabriel. Do you want to add anything else apart from that? Maybe
I would
like the prices. Is there anything to do with like how much would that cost? Like starting from.
I would say if any exchange wants to go get licensed, if you have less than 2 million standing around as a capital, minimum capital, don't go for it or now. Like actually major exchange grow bigger. The minimum capitals actually differ. There's ones that going up for, like if you are a service asset provider, you're probably going to end up paying 200,000 plus as well some other sufficient insurances. Nothing would go less than a million or two to actually ensure that the users that you're going to be using, they're going to be using your platform, your services, the businesses and the institutions are actually in a safe way in case your business goes sideways.
Okay, I see. And this is only applicable for the jurisdictions that you just mentioned, which are in the MENA region, specifically in Bahrain and in the UAE, right?
And Qatar, today I'm proud to announce today that we got the first exchange license within the jurisdiction of Qatar through the licensing authority over there. Now Qatar have been added to the mix in terms of licensing crypto exchanges.
Nice, nice. Awesome. We will open for questions at the end of this presentation. So now we will go to the second part of this, which is the technology part. Um, Let me just, okay. So thank you, Gabriel. Okay, first things first. Before getting into technological details, we need to highlight important insights. The number of crypto traders doubles every year. Today, it's around 300 million traders. Last year, it was 120 million traders. And by the end of this year, it should be around 1 billion traders, according to crypto.com. But don't let these numbers mislead you. Talking to Forex brokers and to exchange software providers, we found that 90% of new crypto exchanges fail to be profitable in their first 18 months. People who launch a crypto exchange business are often high net worth individuals who made money on crypto, or they are Forex brokers who want to run a spot crypto exchange and not crypto CFDs. We can summarize the main reasons for this massive failure in 2 points. First one is that the managements of these exchanges are not deeply familiar with the crypto market dynamics and its technological infrastructure to allow them to offer attractive propositions to crypto traders. The other reason why most exchanges are not profitable is that the traffic per user is lower compared to the Forex market because of the psychological difference to the typical Forex trader who is active with a high risk tolerance. So if your customers do not generate traffic and you do not know how to stimulate it, your exchange is doomed from the start. And this is another area of focus for us at Mercurian. So it is mainly a know-how issue, but even the know-how alone is useless if you cannot reflect it in your products via the technology you are building. Now, when it comes to the technological infrastructure or the components of a functional crypto exchange, we first have to look at connectivity or being connected to service providers. Connectivity part includes wallet service providers because you will want your traders to have their own unique addresses so they can share it with their friends to send and receive funds. One good example of a wallet provider that is connected to all major blockchain protocols is Crypto API. Connectivity also includes KYC service providers. One thing to factor in is what percentage of people pass the KYC and if there is a public information about this. because the last thing you want is to spend money on acquiring customers and lose them at the KYC stage. So consider allowing people to trade and deposit a certain amount via light verification, and later you ask for a full KYC for larger amounts. This way you reduce the customer churn rate. Also consider manually going through the KYC process to avoid being unpleasantly surprised by how complicated the process is and the potential outright rejection. Examples of popular KYC providers are Jomio, Shofty Pro, Verif, and SumsUp. And I think there are some people from Shofty Pro today with us here. Connectivity also includes SMS dispatchers. It's used for several reasons. The most used case is for issuing a one-time password, OTP, in order to verify a new customer's ID and securely onboard them. A good example of an SMS dispatcher that has wide client base in the crypto market is Twilio. Their messaging API provides global coverage at reasonable rates. The last and most important part in connectivity is connecting with crypto exchanges for liquidity. Before you decide on which exchange you connect with, you have to check deposits and withdrawal rates, and also check the trading fee ladder, so you can adjust that to your projected volumes. Because some exchanges are more attractive when you have lower volume, and some are more attractive if you have higher volume. Second part is applications. You will need to build a mobile app for users to trade and invest on the go. You will also need to have a web app where users can access your exchange from desktop using a web browser. And finally, you will need a back-end platform or admin panel for you to manage all the business. When it comes to the back-end platform, you have to check two things. One, check configurations to see how you can set different plans for different customers tiers. Two, how easy and how quick it is to set up and manage the trading platform, because often a trained ID professional can cost you more than the entire cost of the software itself. Third part in technological infrastructure is order processing. This includes order matching and routing to exchanges. As for the order matching, a lot of exchanges software allows you to match your orders internally, which makes you compliant with the exchange license that you will acquire. Question is, do you have enough traffic to match orders internally? Otherwise, connecting to an external liquidity is the solution, which is the next point. Routing to exchanges. Here, you can plug with one exchange or multiple exchanges. If multiple exchanges, you can connect with centralized exchanges or decentralized protocols. The advantage of connecting with decentralized protocols is that you can get more instruments and you will be the quickest to the market as soon as a hot coin is available, because you will always find it on decentralized protocol like PancakeSwap, for example. On the other hand, decentralized protocols have some disadvantages, like the higher cost and often considerably higher processing time. The fourth and last part will be covered under the technological infrastructure is the funds security. Where are you going to hold your funds? Is it going to be your own wallets, hot or cold, or you will be holding the funds at an exchange account like Binance and Coinbase? Or you will go with the most secure and most expensive option where you hold your funds with a custody provider like Copper and Fireblocks. Please note that in this case, costs are high because you will be charged for both holdings and transactions. Also, if you go with the custody provider option, keep in mind what instruments and what transfer protocols do they support, because in certain cases, inflow and outflow transaction costs can be 100 times more expensive or cheaper. The last part about the technology is when you decide to go ahead with building your crypto exchange technology, you will have different options. First, you can go with the cheapest option and buy a ready white label solution. This will cost you between $10,000 to $50,000. It takes between 1 to 4 weeks to be ready to go online and comes with some challenges as it only provides basic trading options and features. And any additional requirements and features will cost you additional time and money. One critical point to highlight is that once you go with this option, see if you can use your own liquidity accounts or you are locked to use providers' liquidity accounts. There are some companies provide white label solutions like AlphaPoint, Radin Dev, DevExpert, B2Broker, Cleakle, and Mercurian Crypto Technologies, which is us. Your second option is to build the technology in-house. This will cost you between $500,000 to $1 million, and it takes between 12 months to 24 months to be ready to go online. This also comes with its own challenges. Apart from the excessive cost, finding talents who are specialized in financial trading is difficult. It also has very high delivery risks based on experience from many of our clients. The third and last option is to get a bespoke or tailored crypto exchange. With this option, you will get a fully customized platform whose proposition matches your customer needs with a relatively short time to market. This will cost you between $80,000 to $500,000, and it takes between 2 to 12 weeks to be ready to go online. Its only challenge is that it will cost you a bit more than a ready white label exchange. Because brokers sometimes want this option, but they see it a bit expensive compared to the white label, we have put together a certain package that has special rates and conditions for the ones who are interested. Getting back to the point of stimulating traffic from the first section, packaging specific propositions is doable in this option if the provider is willing to help. As Mercurian, we are collaborating with our clients by focusing precisely on stimulating traffic and other areas of which we cannot speak publicly about, as some are closed collaborations and others are in the early R&D stage. That's all for the technology part. I will leave the stage for Matthew, who will walk us through the marketing parts. You are muted, Matthew.
Yep, thanks for the heads up. So yeah, I was saying thank you, Yassin, for the presentation. I think you covered technology quite well. And Gabriel covered the regulations. So the last things is, okay, you're regulated, you have your exchange, you have the technological solution, and it's time to open up for business and pretty much drive sales. So when it comes to marketing and sales, I guess the same principles apply, whether it's same fundamental principles of marketing and sales apply also within the crypto exchanges. Eventually, good things to know is your CPA, cost per acquisition, your lifetime value of the user, as Yassin kind of mentioned, stimulating the traffic within already existing users. And in this way, you would get crystal clear in terms of like how and what you can do. So in terms of what are the options for advertising in your crypto exchange, obviously you have the typical options such as social media. Of course, the problems that come with that is quite a lot of regulations and takes quite a lot of time. Also, you have to reach quite a lot of eyeballs to make those conversions happen and become paying users. Of course, you have the free social media aspect as well. Platforms such as Twitter, Telegram, and Discords are mainly the big ones in the crypto space that users actively engage and discover new projects. But of course, that's community building and needs quite a lot of time. You also have events such as this one, for example. It can be for your already existing users or for new users to kind of like engage them and show your unique selling points. In terms of events, we had, for example, 300 people clicking to attend. At the end of the day, we have around 35 attending today, 40 people almost. So with events, it's always a problem of stimulating show-ups. However, events can be quite successful when it comes to engaging with your already existing customer base, because the market principle is valid in crypto as well. It's always more expensive to acquire a new customer than to keep an already existing customer. Influencers are a good shot. You can find good micro-influencers in certain regions and in certain geographies where you can engage with them and stimulate kind of like micro promotions, tap into their audience and bring them to the exchange. Partnerships with other brands, this is actually very interesting. I'll give an example with Dopamine and how we grew our following to 100K Twitter followers. One of the really effective ways in terms of partnerships is that you can cross market with different brands in the space and do cross promotions, whether it's NFT drops that we were doing in the case with Dopamine that turned out to grow our following quite massively. Obviously, that helped to later on transition these people into users. And finally, you have paid media in the form of crypto news websites and apps where we fall in the category with Dopamine app. So just to cover the costs a bit overall in terms of like how much everything costs, social media currently across the board, if you look at Meta, it's around $17 CPM cost per 1,000 impressions. TikTok is actually quite a good channel to source and get in front of clients. It's usually around $9.40 average CPM. Events usually are free to organize, but then again, you can put promotion behind them to push people into it. Influencers, just to give you a concrete example, because we're running currently influencer campaigns to get people on board. Influencer with 60,000 downloads of a podcast per month costs anywhere from 1K all the way to 10K. And of course, partnership with other brands, you just need human capital to go after other brands, reach out to other exchanges, reach out to local players in your market where it's on-ramp, off-ramp solutions, or any key strategic player in the market that you can partner up and do cross-marketing to get people on board. Usually such promotions are free of charge, but require quite a lot of capital in terms of human capital in terms of person chasing these partnerships. And with crypto news and websites and apps, of course, the cost is very flexible. It starts average CPM or cost for 1,000 eyeballs reach can start from $3 all the way to $15. And the good thing about working with crypto news websites and apps is that you can close deals that are later down in the funnel. So to say affiliate deals where you can pay for deposits. And in terms of deposit rates, usually the cost per acquisition that we see speaking with tons of exchanges on the market, a typical cost per acquisition is more or less around $300 to acquire a user who actually passes through KYC and deposits money on the platform. Of course, with crypto medias, you can create much more custom deals. For example, pushing people whether to do a free registration or some incentive to actually deposit money on the platform. So I would love to share more with that of the conversation. And in terms of what kind of communication messages and approaches are being used by current exchanges, of course, with launching a new exchange, there are already huge, massive players on the market. So you have to be really niche, really unique in terms of what you're providing, whether that's like your customer support, whether that's a very quick KYC, as Yassine mentioned, like a very light KYC that you can start trading quite quickly. It's really, really important to niche down and focus on that. And that's pretty much it. You should be quite clear on your lifetime value and your cost per acquisition so you can make the equation work and actually be profitable within the first 18 months and moving forward. Because at the end of the day, it's all about how much does it cost you to acquire a new user and how much do you gain from that user over the lifetime of them trading with you, so you can actually break even and move into profit.
Awesome. Thanks so much, Matthew. We will now just go to a Q&A session where whoever wants to ask a question can ask it. We already have like a couple of questions. One is from Lotfi. He says, I would like to connect with Gabriel. Here is his email address, so you can directly contact him. Ali Jamal, which is the best jurisdiction that allows banking facilities for a crypto exchange? I think this is for you, Gabriel.
All the best restrictions so far for banking, I would say the Central Bank of Bahrain, considering that the regulation do match the banking sector and there's no kind of problems with banks adapting to crypto or digital asset platforms.
Okay. So I'll also allow mics for all the attendees. So if you guys want to just raise your hand and ask a question directly, that's also possible now. There is another question by David. He says, regarding regulatory requirements, do vendors need to obtain KYC end-to-end, or are they simply required to KYC just clients transferring funds directly to them? For example, professional traders with the clients, would you need to KYC their clients or just the professional trader?
Or it depends on the operation of your platform, but it's mainly KYCing all parties because regulatory standpoint, KYC and AML are one of the major key points to getting licensed and regulated. And they are as well one of the points that needs to be respected and monitored the most.
Okay, I see. David, is that does that answer your question? Do you have any other questions? Anybody else? Okay, thanks. Okay, so there's another question for you, Gabriel. It's which bank do you recommend in Bahrain for crypto transactions?
I would say all of them does work. Well, Al Kuwaiti works pretty well. Bank of Kuwait, there's as well, because Bahrain have the most offshore banks as well. So all of the international banks are over there. But I would say because the regulations already are adapted to the crypto side and the digital assets, there is no problem in opening banks, receiving funds, transferring funds, or from either a business or as an individual. So all the banks do comply because the central bank is granting the licenses.
Okay, and which bank do you recommend in Dubai for crypto transactions? That's a question by Ankita.
Okay, so the banking in the UAE is not really meant on point. So far.
Gabriel, we are losing you. Can you repeat the answer, please?
Sure. So can you guys hear me now? Is it better?
Yes.
So I would say the banks in the UAE and the banking sector in the UAE still do not match, the regulations do not match the regulatory standpoint of digital assets. So the bank do not know for the moment how to deal with digital assets. So far, I would say keep an eye on it. Don't actually, I won't recommend any bank in the UAE so far because the regulations are not on point. Sometimes they allow, sometimes they don't. So far, stick with an international bank, I would say, or banking facilities that are actually matching the regulation side. But in the UAE so far, we're still some time to go into the regulation to actually match the digital assets.
Okay, thank you. Okay, so is there any other questions you would like us to answer in terms of marketing, technology, regulations? I think that's it for us today. Thanks so much, Gabriel, and thanks so much, Matthew. If you guys would like to contact any of the speakers, here are their email addresses. We welcome any inquiries. Thank you so much for attending with us, and have a lovely rest of the day. Bye, everyone.
Thank you, guys.
Cheers. Everyone, have yourself a wonderful day.
Thanks.
Thank you.